here's what I normally do. So I'll be looking at monthly time frame, so I'll know the end goal of the currency itself. I'll know the end goal, I mean where it's going, where it is ranging, I mean the interval. So I mean the long-term interval. So you're gonna be finding the monthly key levels by using the what is was explained here. What was explained, meaning what was explained, the the 1,000 pip range, using the quarters to find the quarters point. But as for currency, we're gonna be halving them to find the weekly strong point. So by doing this, okay, you're gonna be starting from monthly to weekly to daily. So then you go down for 4 hour time frame, 3 hour time frame, or 2 hour time frame, or 1 hour, maybe 5 minutes, and then you execute your trade. So by analyzing this whole thing, we're gonna be starting by finding the ranging. That's why I told about ranging before. Ranging is like a prices movies, doesn't have a certain direction. Traders don't have a control over it. So the ranging, this is the ranging. First ranging, a valid range should have at least two touch in the bottom and the top. No, 1 2 1 2. This one also, this is one of the well-known pairs, Euro USD. So this is a range, 1 2 1 2 1 2 1 2, meaning it should have at least two touches. Is it a range? This one, it doesn't look like a ranging, because the market trended for several time. It didn't range, it's actually trended. It was in a trend, it was trending, because it went down. It didn't even give a buy. There was no a pullback, maybe a bullish candlestick. So we're not seeing it, so it doesn't really qualify as a ranging. So we're gonna come this side. Okay, we see another ranging. So yeah, identify our ranging first. To identify our ranging, so what you're gonna do now is to identify the powerful range, the powerful range, here, like which one will be serve as a key, for us to identify our key levels. Okay, I'm seeing this range looking like it ranged for almost how many, for almost from 2015 to almost a year, like 2 years, almost 2 years. So you see how the market works. You see. So it's literally was ranging in here for certain long period. Some people were holding long buy position, were buying somewhere else, yet they never know what's going on, because they don't know what's going on. So by you identifying a long strong levels, like the monthly levels, it's helped you to identify the long-term movement of the currency. So by identifying this so we're gonna look at the powerful ranging. Here is ranging for very, very, very it shows like a huge rejection when it comes here, and also here when it comes here, it shows a huge rejections. So what you're gonna do, we're gonna draw our horizontal line in maybe we can start from here, I can start from here, but anyway, let me start from the bottom. So I draw my line there. I draw my line. Remember, as the quarter theory said, we're gonna be looking for round numbers. Gonna be looking for round numbers. I mean the market itself is respect the round number. So I drew this line. What is it? It is at the point 1.04907. So it's at 1.4097, 1.0497. Okay, whatever. I hope you can see. Is that so? What I'm gonna do? I'm gonna edit the coordinate. I'm gonna come here. I'm gonna 1, 2, 3. So it's near. It was near 5. Let me just cancel and show you. Okay, and I come here and I go setting. The coordinate is 1.04907, meaning it's near 1.05. Yeah, 1.05. We're not rounding. So we're actually rounding it to find the digit. So find the 1.05. So from here we're gonna be looking for 1,000 pip range. So this will be our first monthly key level. Let me just type monthly key level. So let me just delete this because we already found the trigger. For our analysis. So we already found the trigger for our analysis. So what we're gonna do now, we're gonna be looking for that 1,000 pip range. Looking for that 1,000 pip range. So yeah, let's just look for it. So what you're gonna do, we're gonna be calculating a different from this price to at least 1,000. By looking here is near 1,000. So what I usually do, I draw a line here. So you see, it was actually ranging in between the strong monthly level. So we're gonna write the coordinate. I'm gonna edit the coordinate. Let me just write the name in monthly key level. So it will be 1.5. Yeah, 1.5. So it's actually 1,000 pip range. So here we go again. Let me just say yes again. Near 1,000 is here. So you see what's actually happening here. The price broke here. The price broke in this level and nearly hit the retest and then bounced to another level and then come back down, and then it's retested this level. So it's more likely to come here again. It's more likely to come here again. So this was actually a sell. We actually signaled sell during the day here for Euro USD. Let me just see. It's actually succeeding. I think. Yeah, it was succeeding. Actually signal sell. Give out the signal for sell. Okay, let's just focus on okay, let me just say research chart. You see, we draw the signal for sell when it comes to this point, when it was hitting some confirmation for a result using what is it? Let me just test something. What is that thing? Let me just put this in place. Oops, my levels are actually edited. So what I do is, okay, I go from here to here. Let me just mark them all back. So this is actually a certain level short. Yeah, this is actually a certain level short. So this is actually 30. It's actually 30 somewhere else here. This is actually 30, because you can see it's 1, 2, and then there's 38, and then there's 50. There's 38 somewhere else here, and then there's 50. So you see, like in this way, when you analyze your market in this way, your market will become very, very, very easy. Your trading, you'll definitely enjoy trading. You'll even quit your job. I can tell you can even quit your job, quit school, and you'll be like, nah, I've mastered this. But in Forex, there's no guarantee of winning, especially when we use price action. We actually predict the market. It's all about probabilities. But when it hit when it hits there and then reject, it has been touched the bottom